Could Bitcoin reach $1 million in value, or might it collapse to zero? What does the future hold for this digital currency? Welcome to the world of Bitcoin, a realm where possibilities seem limitless, and the only certainty is uncertainty. Bitcoin is the first of its kind, a decentralized digital currency that operates without a central bank or a single administrator. It's a currency that's not tied to any country or government, a global medium of exchange that has taken the world by storm. But what makes Bitcoin so intriguing and at times nerve-wracking is its volatility. The price of Bitcoin can skyrocket one day and plummet the next. It's a roller coaster ride that can make even the most seasoned investors wince and the bravest ones cheer. Why is Bitcoin so volatile? Well, it all comes down to a few key factors. The first is supply and demand. Bitcoin has a limited supply. There will only ever be 21 million Bitcoins in existence, and over 18 million have already been mined. This scarcity can drive up the price, especially when demand is high. Market sentiment also plays a significant role. Like any market, the price of Bitcoin is influenced by the mood of its participants. Positive news can send the price soaring, while negative news can cause it to tank. Regulatory news can also make waves in the Bitcoin market. When governments announce new regulations or restrictions on Bitcoin, it can cause the price to fluctuate wildly. But it's not all doom and gloom. Bitcoin has shown remarkable resilience over the years. It's weathered numerous storms and come out stronger on the other side. It's a testament to its potential and the faith that its supporters have in it. So could Bitcoin reach $1 million in value? Could it collapse to zero? Only time will tell. But one thing's for sure. Whether you're an investor or just curious, understanding what drives Bitcoin's price is key to predicting its future. And in the volatile world of Bitcoin, knowledge is definitely power. The law of supply and demand is a fundamental concept in economics, and it applies to Bitcoin just as it does to traditional commodities. You see, Bitcoin, the world-renowned cryptocurrency, has a finite supply. The total number of Bitcoins that will ever exist is capped at 21 million. This scarcity is one of the key factors that differentiates Bitcoin from traditional currencies, which can be printed in unlimited quantities by central banks. Now, let's consider the demand side of the equation. Demand for Bitcoin has been on a steady rise. More and more people are becoming interested in Bitcoin, and the reasons are varied. Some people see Bitcoin as a hedge against inflation, a digital gold, if you will, while others are attracted to its potential for high returns. Businesses too are joining the fray, with many major corporations now accepting Bitcoin as a form of payment. This growing demand, coupled with the limited supply, creates an interesting dynamic. In the world of traditional economics, when the demand for a commodity outstrips its supply, the price tends to rise. The same principle applies to Bitcoin. The more people want Bitcoin and the fewer there are available, the higher the price will go. But it's not just about the raw numbers of supply and demand. There are other factors at play. The process of mining new Bitcoins becomes more difficult and resource-intensive over time, further limiting the supply. At the same time, as more and more people come to understand the potential of Bitcoin, the demand side of the equation may continue to grow. So what does all this mean for the future price of Bitcoin? Well, if demand continues to outpace supply, we could see the price of Bitcoin continue to climb. But remember, the world of cryptocurrencies is volatile and unpredictable. While supply and demand give us some insight, they're just one part of a complex picture. With only so many Bitcoins to go around, the more people want them, the higher the price. Bitcoin is highly sensitive to public sentiment, but why does what people think matter so much? Well, let's delve into the world of market sentiment and its influence on Bitcoin. Market sentiment, in its simplest terms, is the overall attitude of investors towards a particular market or financial instrument, in this case, Bitcoin. This sentiment, be it positive or negative, can greatly influence the price of Bitcoin. Imagine a scenario where a piece of positive news breaks out about Bitcoin. Say, a major company announces they'll start accepting Bitcoin as payment. This news creates a buzz, a hype. The public sentiment sways towards the positive, and more people start to buy Bitcoin, hoping to benefit from this wave of positivity. As demand increases, the price of Bitcoin naturally rises. On the flip side, let's consider a situation where a negative news story hits the headlines. Perhaps a prominent figure expresses skepticism about Bitcoin's future, or a country announces strict regulations on cryptocurrencies. This kind of news can instill fear or doubt in potential and existing investors, causing them to sell their Bitcoin. This selling pressure can lead to a drop in Bitcoin's price. Now let's talk about the influence of major investors and celebrities on market sentiment. These individuals, often referred to as influencers, have the power to sway public sentiment significantly. A single tweet or public statement from them can cause massive waves in the Bitcoin market. For instance, if a billionaire tech entrepreneur expresses interest in Bitcoin, it can spark a buying frenzy, pushing the price up. Conversely, if a renowned economist criticizes Bitcoin, it can trigger a selling spree, leading to a price drop. In essence, the Bitcoin market is like an ocean, and market sentiment is the wind that can stir up powerful waves or calm the waters. It's a dynamic, ever-changing landscape where perception can quickly become reality. In a market driven by sentiment, a change in mood can mean a big change in price. While Bitcoin operates independently of any government, it's not immune to their influence. Regulatory news, whether it's a whisper in the wind or a blatant headline, can significantly impact Bitcoin's price. It's a bit like a seesaw. On one side we have regulations, and on the other, the price of Bitcoin. When one moves, so does the other, just in the opposite direction. Let's delve a bit deeper into this seesaw analogy. Picture a playground. On one side, we have a heavy-set, bullish investor, confident and ready to push Bitcoin to new heights. On the other side, we have regulatory news. Now, if this news is positive, it's like a feather, allowing our bullish investor to launch Bitcoin skyward. But if the news is negative, it's like a boulder, forcing our bullish investor to descend and the price of Bitcoin along with him. Positive regulatory news boosts investor confidence. For instance, when a government announces that it's embracing Bitcoin, it's like a green light for investors. They see this as an indication that Bitcoin is gaining acceptance, reducing the risk of a potential crackdown. This surge of confidence can lead to increased buying activity, pushing the price of Bitcoin up. On the other hand, negative regulatory news can trigger a sell-off. If a government suggests tighter regulations or even a ban on Bitcoin, it sets off alarm bells. Investors may start to panic, fearing that their investment could become worthless. In their rush to escape, they sell, and the price of Bitcoin plummets. The impact of regulatory news on Bitcoin isn't a one-off event. It's an ongoing tug-of-war between positive and negative news. And that's something to bear in mind if you're thinking about investing in Bitcoin, or if you're already on board. It's a volatile ride, no doubt, but it's also an exciting one. It's a bit like riding a roller coaster. There are ups and downs, but it's the thrill of the ride that keeps you coming back. Until Bitcoin is universally accepted, regulatory news will continue to be a major price driver. So, where does all this leave Bitcoin's future? We've taken a deep dive into the world of Bitcoin, exploring the aspects that drive its value and influence its future. We've seen how supply and demand play a critical role, with Bitcoin's limited supply sparking investor interest and driving its price. We've also looked at market sentiment, a factor that can sway dramatically and impact Bitcoin's value in a heartbeat. Our discussion has also touched upon regulatory news and its potential to shape Bitcoin's future. The ever-changing landscape of regulations can either create opportunities or pose challenges for Bitcoin. While predicting Bitcoin's price with absolute certainty is a fool's errand, understanding these factors can help you make well-informed predictions. It's a complex blend of economics, market psychology, and politics. Bitcoin's future may be uncertain, but armed with this knowledge, you're better prepared to navigate its ups and downs.